Wrong. Let's talk about a 20% compounded annualized return for 20 years. And I want to talk about something going on in the housing market that is frankly not good. Well, let's get into it. It is Wednesday, June 28th, and this is your daily financial news. This is a new show we attempt to do 5 days a week live. So you get to hear all the ums and all of that going forward. So it is live. Thank you for being here. If you watch live with me, you're one of the 200 or 300 people that join. Know that I appreciate you waking up and attending this with me. If you watch it on replay, one of the 5,000 of you that watch it on replay, I want you to know that I thank you. Your daily viewership means the world to me. More on that in a minute. So what do I want to admit that I got wrong? I want to be very, very clear. Something that I strive for on this channel is clearly to celebrate things that I get right, but I will also acknowledge what I got wrong. I think that makes me a very, very different channel. And what did I get wrong? I called a Q2 recession. I said that Q2 would be the start of it. Given all the economic data coming out, it is not going to happen. This was wrong. I thought that Silicon Valley Bank and what I saw is consumers retreating would lead to the recession starting, and clearly that is not going to happen. Will a recession happen? Absolutely. The question is when, right? Recessions, as we've talked about many times, are a standard part of the economic cycle. I just think it is fair to say that my recession call for Q2 is wrong. And as soon as I feel good about admitting that, that I'm clearly wrong, I will bring it to you. Again, I will celebrate what we get right, and I will take ownership of what we got wrong. On that end, there were three articles I read about the recession calls. I thought I would give them to you. I am not currently making a recession call, kind of burned on that one, so I will take more time to think about it. But HSBC Asset Management believes that the recession will start in Q4 of this year. They do think it will be a shallow recession that will run much of 2024. So that is HSBC's call. JP Morgan thinks we're going to start in Q4 or Q1. And then Seth Klarman. If you haven't heard of Seth Klarman, it's not a surprise. He really does shy away from media. But he is one of the 5 people that Warren Buffett said can make money over time. So it's definitely someone we should listen to if we get the opportunity. And his call currently is early 2024. So again, clearly I was wrong. Q2 2023, not the beginning of a recession. Durable goods orders, new homes, just not happening. Consumer confidence up. It's just not going to happen. We got that wrong. Hey, let's all of us send a congratulations to Jeff M. Jeff M. is a frequent watcher of this channel, specifically the daily financial news. Jeff M. is also a frequent contributor to the comment sections. Please know, folks, that if you leave a comment, I will look at it. I don't have a team scrubbing these, so Jeff has probably left 500 comments on this channel, maybe 600. So Jeff, thank you for being such a consistent contributor. Thank you for being part of the channel. But why are we congratulating him? He has a house in contract. Why is this important? My memory of my interactions with Jeff started almost 2 years ago. It is my memory, and I could be wrong. It happens all the time. I believe Jeff came to us from one of those Crash Bros channels. You know, those people that have been calling a crash for 5 years and never admitting they were wrong. Those guys. I believe Jeff came to the channel from one of those or multiple of those. He was a little bit confrontational in the beginning. But over time, with consistency on this channel, Jeff saw what was going on. He was doing the work. He had a buy box. Over time, Jeff was struggling. He was stressed out. It was too much competition, overbuying, no inventory. It was hard. It is hard for all of us, but I could tell Jeff was stressed out. All you can offer somebody that's going through this is just keep going. And yesterday, there was a comment on yesterday's daily financial news that Jeff said, basically, I did it. I'm in contract on a home. It feels amazing. I did the work. Congratulations. I do want to say a couple of things. One, I want to celebrate writing great offers. I know it's hard out there, whether you are a first-time home buyer like Jeff, whether you're a first-time investor, or you're buying your next investment. It's hard. There's no inventory. It takes work. It takes discipline. I want to change the mindset. I want all of us to celebrate writing great offers. If you write a great offer and the seller says no, celebrate that. The course that I have, How to Get Started One Rental at a Time, does not promise getting a deal. It promises that you will learn what a great deal is. That is the magic of the buy box. Focus, ignore, do the daily work. If you don't know what I'm talking about, check out the course, How to Get Started One Rental at a Time. It's life-changing. It's only $3.99. And you know what? I didn't plan to do this, but I will announce call it a 4th of July giveaway. If you buy the course for $3.99, I will give 2 $50 courses away for free. So you'll get the $3.99 course. You could buy the mastermind, the deep dive, whatever you want. It's all there for you. So again, if you want to buy the course and you need a little kick in the butt, buy it today or buy it between now and July 4th, and you will get 2 free $50 courses. But again, I want all of us to celebrate doing the work. Jeff, congratulations. I would love to interview you on my channel. You've gone through an amazing journey. I'm convinced you were doing the work. I know you were frustrated. I know it is hard. I think your story would help so many. So if you're game to be interviewed and share with the world, I would love to interview you, Jeff, and just hear how it's going. So hopefully you take me up on that. One of the things that I did with one of our weekly millionaires, Casey from Brick by Brick Wealth, she is in Memphis, is yesterday, and I think the video is live already. If not, it goes live today. We talked about our first rental. We talked about how powerful one rental is. So Casey shared the history of her first property, which I think was purchased 8 years ago, if memory serves, and how it's almost producing $1,000 a month in cash flow and is nearly doubled in value. What I did, because I have a longer track record, I went back to Norris Drive, 1818 Norris Drive East. You can look all of this up on Zillow. So if you want to go look up 1818 Norris Drive East, 93703, this is what you will see. I bought the property December 11th, 2002 for $107,000. I sold it November 4th, 2005 for $264,000. That by itself would be impressive, but that's not the story. When you want to build wealth, it's about owning assets for a long time. Remember my step 3 to getting wealthy? 10 years. I want to tell you about a 20-year journey and how it 20% compounded a year. So here's the story. On December 11th, 2002, I buy Norris Drive for $107,000. I put $20,000 down. So if you want to check my math, $20,000 is what I put down. Then about a year and a half, maybe 2 years later, I do a cash out refinance. I take $40,000 out of Norris Drive. I don't spend it. I don't do this. I don't do that. I buy 2 more properties, 2 more single family homes. I think it was Simpson and Terrace, but I could be wrong. Then, as you know, I sold on November 4th, 2005 for $264,000. I actually did not sell. I exchanged. I did a 1031 exchange, took all the remaining equity out of Norris Drive and moved it into a 5-plex that I still own today. That 5-plex today, after what would that be, 17 years, has over $350,000 in equity and helps produce $3,000 or $3,500 in cash flow a month. But what about those other 2 properties that came from Norris Drive? Those two properties were moved into a 13-unit building sometime after Norris Drive, and that building has over $500,000 in equity and over $5,000 a month cash flow. So if you want to check my math, about 20% compounded yearly, this is how I ran the numbers. Input was $20,000. My value after 20 years was $850,000. I did not include cash flow. I did not include mortgage pay down. I didn't include anything else. $20,000 turned into $850,000. I believe that's 20% compounded for 20 years. Wealth takes time. You have to make sure you can hold the asset. No adjustable rate mortgages, no negative cash flow, no alligators. It takes time, but it works. That is really what I'm trying to get at when I talk about the 3 steps to wealth. Dry powder, disposable income. Become elite, your buy box, and then just hold, be patient. So again, you go ahead and check my math. You can watch the video with Casey from Brick by Brick Wealth. Read an interesting article about California. I want to give credit to the survey. The survey was done by Strategies 360. This was a survey of California residents. Apparently, 40% of Californians are thinking about leaving California. As you know or may not know, it's been 2 years in a row where we've had negative net migration. People are getting out. As you know, that is something I am seriously considering as well. But yes, it looks like the great state of California is losing more and more people, and I've definitely noticed the services that make any city go are really going down. It's ridiculously expensive to live here, and it makes complete sense that people are leaving California. And there's a very good chance I will be joining them in the next 6 months or so. Powell is out talking today. When Powell speaks, you have to listen. Powell is out talking tough again. In fact, I would argue that Powell is out talking doubly tough. Powell is being interviewed this morning. I think it is still occurring right now. He was asked about higher for longer, and he took great pains to say, we're going higher. On top of that, he said more restrictions are coming. And get this, there is a possibility that we will hike at back-to-back meetings. Remember, it was only 2 short weeks ago Powell said, or the Fed presidents in their dot plot said 2 more hikes were coming. Powell went the next step and said, we may raise twice, which I think would be in a row, which would be July and September. I believe those are the 2 next meetings. This is dangerous for me. I still believe that Powell is done. I believe this is all theater. He is talking tough. He wants Wall Street to have some pain. He's tired of the stock market going up. So I think he's talking tough. And we'll see. I make these calls, and when I'm wrong, C.1 today, I will freely admit it. But I am not changing my opinion. I believe he is talking tough. I believe he has to talk tough. This is what I've talked about. But I think no more rate hikes are coming. If I'm wrong, I will own that. Not a problem. So I got a couple of questions. I want to give credit to Ben. Ben left this comment in yesterday's Daily Financial News. I want to ask you, the viewer on YouTube, and you, the viewer on Twitter. You come back to one rental at a time every day. Most of you do. I want to know why. Why do you come to one rental at a time? I know I produce an ungodly amount of content. I know 6 videos a day probably blows up your YouTube feed. It's frankly why my channel doesn't grow very fast. I am convinced that I produce too much content for the YouTube algorithm to benefit me. I don't do this for the algorithm. I do it for you. I try to bring you a daily show 5 days a week. I try to bring you 10 millionaires every week for you. But I'm curious, why do you come back? I'm just curious. Hey Josh, your black card did not arrive. Send me a note on IG or somewhere, and I'll mail another one. I remember I mailed that. I remember your name. But send me a note. I will send you another one. No harm, no foul. Thank you for the super chat. Sorry you had to spend $2 to say that, but we'll figure out a way to make it good. So again, I am curious why you come back. Again, I know I produce a lot of content. Just curious. I will call out that I put a different number up here. This used to say 50,000. We are now under 3,000. In fact, as of this morning, we are 2,726 away. I'm going to treat this like the last day of school. I don't know if you did this, but every year I would count down the days until school is out. So instead of saying 50,000, we're going to count backwards. So if you subscribe right now, you could think of this little ticker going backwards. We're going to count backwards to 50,000. Currently, as of right now, we are 2,726 away. So again, like, subscribe, comment. I appreciate it if you do that. If you share it, you ask others to join. July 16th, I've got a couple of questions about that event with Dan Bird, the person who's called the stock market right the last 18 months. If you don't believe me, go back and check his playlist out. He has been far more right than wrong. I know it's Sunday. I know some of you are at church. I know some of you have family plans. Trust me when I say this. You want to buy it because I will give you the video after. I will record the session. I will download it. I will load it on Teachable and give it to everyone who buys a ticket. So I know if you can, it'll be great for you to interact and ask questions. But trust me when I say you will want to get the video recording of Dan talking about what he goes through each week, what he looks at, and all of that. So again, it's $47. He has made some of you thousands and thousands of dollars. He has helped you stop losses in risk sizing and risk calculator. It is worth hundreds, if not thousands of dollars, and you can get it for 47 bucks. Not buying it is a mistake. I will just say that right now. Not spending $47 to learn from somebody who has been more right than wrong for 18 months is a mistake. Flat out a mistake. And then finally, I want to call out a video that went live yesterday at 7 p.m. Omar, one of our millionaires that we talk to every Tuesday. You could watch me in the video. I was getting nervous. He talked about what is going on in his California market. This California market was approaching 2,000 active listings. It's now under 800. More importantly, real time, he went in and started looking above and below the median. Folks, we have a problem. Most markets across the country, the below the median inventory is shrinking. You are getting multiple bidding wars. We are going to have upward pressure. And in the video with Omar, I told him that I thought his market would be up 10% between now and the end of the year. I don't know how it doesn't happen. You have some luxury listings that are old and dying out. You've got nothing at the bottom. I don't know how it doesn't go up from here. The inventory is so scarce. So I would ask you to watch that video. The video is titled, "This is Not Good." This is not good. Watch it because I would ask you to look at your buy box in your market. Is your market the same? Is your market different? I think it is important to figure out. Omar's market is way unhealthy. Omar's market is more unhealthy today than last year. How wild is that to think about? And then finally, I want to congratulate the trucking landlord. The trucking landlord, you got your next deal. Apparently this was deal number 15. Congratulations. Your card will go out. And again, Josh, please send me an email or a DM on Instagram or my website. I will mail you another card. I'm sorry it never came through. Sometimes these cards get beat up in the mail. But the trucking landlord, congrats on deal number 15. Jeff, congratulations one more time. It's amazing to see that good work, consistent effort pays off. I am so happy for you. I know you're in contract. I've had deals blow up. I hope it doesn't happen. I hope you get everything you want. But if it does, just remember, you did it once, you can do it again. Folks, have an amazing day. Like, subscribe, comment. We are 2,726 away from planning a Vegas party. Thanks. Bye-bye.